Today's video is a San Mateo County market update for the month of June 2022. Let's jump right in. Hey there, it's me, Joe Polyak, local San Francisco Bay Area real estate agent with Rise Homes. I make videos like this if you're thinking about maybe buying, selling, or investing in real estate, or you just want some information about the local San Francisco Bay Area real estate market. This is actually my first time looking at the data, so we're going to look at it together for the month of June 2022. So new listings that hit the market, 553. Versus last year, June 2021, 641 new homes hit the market. So we are seeing actually a fairly significant slowdown in the number of homes that have hit the market this year, June, versus last year, June. And just out of curiosity, let's pop in and take a look at June 2020, because I think that would be interesting to see as well, because that's right after the pandemic. 518. That was a really, really slow June, because right after the pandemic started, March 16th, 2020, everything went ground to a halt essentially. So right now we are back to really low numbers of new homes hitting the market, 553. Inventory at the end of the month, 614 versus last year, 579. So actually the number of homes available for sale at the end of the month is more than last year. So that signals that we have a higher level of inventory. It was 612 back in 2020, June. So generally speaking, June is a month where things start slowing down in our area. So a lot of people say, oh, the summer months, I hear, a great time to put your home on the market. The answer to that question is, every year is different, but generally speaking, the hot months are March, April, May, because people are exiting out kind of that winter holidays, back to work and back to the New Year's resolutions after the holidays, January, February, and then people start getting strong into the house hunting in that March, April, May time frame, because a lot of people want to make their moves and do stuff before the summer so they can enjoy the summer, going out of town, going on vacations, going on trips where the kids are out of school, or where things are sunny and you don't have kids, but you want to just go travel. Oftentimes the market slows down a little bit in the summer months of June, July, and August and start picking back up again. Kids are back in school, people are back from vacations in that September, October timeframe. So with that being said, let's continue. So the number of homes sold, I'm looking at June 2020 right now, 348 homes sold in June 2020. June 2021, 550 sold, so quite a few, and only 374 homes sold in the month of June 2022. So that's a real steep decline. It was a crazy increase from 2020 to 2021, 550, and then another kind of crash in the number of homes that sold. The average days on market, we're not going to look at that for 2020 because they deleted that data for the month of June 2020 because it wasn't relevant data because the pandemic hit at that time. Average days on market for June 2021 and 2022 unchanged at 14 days on market. Let's actually even pop in and compare it with May 2022, just the previous month, because that's just interesting to see. Again, 14 days on the market. How many homes sold? 467. So a lot more actually still sold in May 2022 compared to June 2022. Average sales price, 2.5, a little bit over 2.5, and median sales price a little bit over, well, not a little bit, 2,050,000. June 2021, 2.632, almost 2.1 million. So a little bit of a decrease year over year. Let's take a look at June 2020. So obviously an incredible increase between 2020 to 2021, while a slight decrease year over year from 2022. But let's see what happened from May 2022. So again, a slight decrease in price because the average sales price was 2.716 million and 2,081,000 was the median price for May 2022. We are seeing a little bit of a decrease. So let me get into that a little bit. What is causing this slight price decline? You've heard that the Fed has been increasing interest rates. I'm making this video on July 14th, Thursday, July 14th, and the Fed is set to, it seems by all likelihood, are going to do at least a 50 basis point increase in the federal funds rate. Basically, it partially impacts mortgage rates. The mortgage market is its own market, and mortgage rates fluctuate day by day. The Fed meets every quarter, I believe, and they set what is going to be the federal funds rate, which is they set what the Fed lends to banks at. The mortgage rate increases up and down day after day based on what they think the future will hold and demand for mortgages, what the economy is, all these types of things. They're economists. Different banks are different, have different opinions, and some are more aggressive than other ones. That's why sometimes you're shopping around for a mortgage and one bank is going to give you a lower mortgage than another one for the same exact product, and they have different stipulations and et cetera, et cetera, et cetera. With that being said, because the Fed has been increasing rates to fight inflation, as you've heard, inflation has gone up to, I believe the latest number is close to 9%. Since the Fed has decided that their primary objective right now is to fight inflation because they believe that the economy is doing well and it can withstand the decrease in demand that they are creating by increasing interest rates, they're continuing to increase interest rates. So it seems like they're going to do at least a 50 basis point increase. By all likelihood, it could be a 75 basis point increase, which means 0.75% increase in what the Fed is charging banks. That, I believe, the mortgage market has already priced that in. So let me repeat that. I believe that the mortgage rates have increased right now. You're hearing in the news they're about 5.5% to 6%, or if not more, for 30-year fixed mortgages. It's actually a little bit less for our area for jumbo mortgage products for a number of reasons I'm not going to go into, but happy to talk about offline. Right now, you can actually still get a 30-year fixed mortgage over $1 million loan amount in our area for under 5%. So that's still possible. Still, mortgage rates have increased. Because of that, obviously, let's actually jump into a mortgage calculator and just mess around with this. Let's say that you were going to buy a $2 million house 6 months ago, where mortgage rates were 3%. You could even get it lower, but let's just say you're putting $500,000 down payment and you're getting a $1.5 million loan amount. Let's take a look at that. So let's change the interest rate to 3. And so your monthly payment, not including property taxes, HOA if you have it, or home insurance, your monthly payment was $6,324 for a $2 million house. Right now, if you buy that same $2 million house, interest rate 5%, now it's $8,052. It's over $1,200 more, at least, you would be paying every month. But realistically, it could be even $1,500 more that you would be paying for the same house. If you bought a house 6 months ago, your payments would be a little bit under $6,500 for $2 million if you bought that house. Right now, it is hovering over $7,500 to maybe even more than $8,000 per month. So that has caused, because people are not buying the price of the house, they're buying what are their monthly payments. What can I afford every month? If I make $20,000 per month, or me and my wife make $25,000, $30,000 per month, there's a big difference between if we're paying $6,000, $7,000, $8,000 a month with, property tax and everything included, or $10,000, $11,000, $12,000 a month. There's a huge difference between that. And if rates continue to increase, we will most probably see prices continue to decline for the prices of real estate in our area. I'm not going to go into a lot of detail about what we see in the news. Having read a few articles recently, we are hearing that the San Francisco Bay Area and maybe other similarly priced, very high priced markets are seeing the biggest drops and the biggest slowdown in demand. The likelihood is because of the very high price point. Okay, let's just jump back in. Take a look at June 2022. So median price per square foot, 1,234, very interesting number. 2021, 1,142. So even though median price and average price has decreased, the price per square foot is up quite a bit, almost 10%. Actually, I think if I'm doing the math right in my head, it's about 7 or 8%. And there was $1,000 in June 2020, price per square foot, the average. 1,256. This is the median price per square foot in May 2022. So a little bit of a decline from May 2022. On average, homes in San Mateo County were selling for 13% over asking price. It was 1% over asking price June 2020. Pandemic year, hard to think about things that way. 11% over asking price homes sold on average June 2021, and June 2022 homes sold 9% over asking. To summarize, essentially what we're seeing is interest rates are rising, mortgage rates are rising, home prices are slowly starting to decline. The stock market has essentially, for a lot of people, especially in our area, has crashed, especially for growth stocks. So a lot of growth, tech, high multiples, high valuation stocks have decreased by 70, 80, 90% in some cases. That's a lot of people's down payment here in this area. I've had a number of buyers, a number of people that I've been working with that maybe they started talking about buying a home 6 months ago, 9 months ago, said, we're going to wait a little bit. We're going to get our ducks in a row. Got a lot of stuff to do with work. Got some vacations to take. Probably going to start looking later on. Call them, follow it up with them, talk to them. hey, Joe, even though rates are up a little bit, that's not the big deal. That's not what's really causing an issue here. What's causing an issue for me right now is I had $1 million, $1.5 million, $2 million in my stock portfolio, and now it's down. It's split in half or less. My down payment is down quite a bit. I don't feel comfortable right now taking on such a large mortgage, putting all my money, all my eggs into one basket, selling all my stocks, and be left with no savings, no money in the bank, and this big mortgage. I'm going to have to slow down and not pick up my search back for a while. So to summarize, the market is starting to slow down. We are seeing less offers, whereas we're getting 5, 10, 15, 20 offers on homes that were listed for sale, selling well above, not just asking price, but well above comparable sales 3 to 6 months ago. Right now, we are starting to see a lot less offers and many homes sitting on the market longer, price drops. A lot of this is not reflected in this data because this data goes back a month to 2 months ago, because these are homes that were ratified, offer accepted, got into contract maybe a month, month and a half, 2 months ago that are sold. We're going to see this reflected in the data in the coming months, most definitely. So the data is not painting the full picture because there's a lag, there's a delay. That's very normal with real estate. A stock, if I'm panicking, want to sell all my stocks, I can do it with a click of a button today, latest tomorrow, okay? Whereas real estate, you have to get the home ready to put on the market. You have to then list it for sale, then you get offers, and then you sell it. So there's a lag between what's happening with the Fed, what's happening with interest rates, mortgage rates, the stock market, and then what happens with real estate. So stay tuned. Let's keep our eyes open. Let's see what happens. To summarize, things in the San Francisco Bay Area real estate market are starting to slow down. What does that mean for you if you're a buyer? If you are still thinking about buying a home and you can afford it and you have a good amount of money saved up and a comfortable down payment and savings and reserves in addition to that and investments in addition to that, and you're comfortable to buy a house and you can afford the payment, your income isn't going down, you're still, doing well at your job, this might be a good time to get in to buy something at a good price in relation to a year or 2 years ago. Can the market drop more? Yeah, of course that can happen. In all likelihood, it seems like it will happen. If you are waiting for the market to crash before you buy, if you can wait a little bit and you guys are comfortable where you're at, when you think prices might decrease even further and you're comfortable right now, then wait a little bit and buy. But I think I would focus primarily on not just thinking about the financial aspects of buying a home, but also thinking about the family investment. You could get hit by a bus tomorrow and die, and you didn't get to have a couple of fun little barbecues in your backyard with your kids playing and with the dog and friends over and having a good time with family and friends. So always make sure before you buy or sell real estate, you don't just think about the financial component, but you also think about the joy and the amount of time that you're going to be able to spend with your family. Thank you so much for watching this video. Again, I am Joe Polyak, local San Francisco Bay Area real estate agent with Rise Homes. I make videos like this for people who might be thinking about buying, selling, or investing in real estate. Do not forget to hit the subscribe button, hit the like button, hit the little bell notification next to the subscribe button. If you're watching this on YouTube, feel free to comment, message me, call me if you have any questions. I'm here and I love to talk real estate. Thanks again.